For most investors, seeing an $80 target for XRP seems like a distant dream. But to me, it is not just a dream, it is the inevitable outcome of the 7-year white channel. Today, you'll have the chance to determine exactly how much of that wealth belongs to you. Your patience wasn't a mistake. It was the essential foundation for what could be the most lucrative trade of the decade. The quiet of the past 7 years speaks louder than anything in the history of digital finance. While other assets soared and crashed, XRP remained trapped in a narrow range. This is what we call the white channel. It's been a 2,500-day period of sideways movement, frustrating those who couldn't hold on, but rewarding those who stayed disciplined. Now, in February 2026, we're no longer talking about potential. What we're seeing is a market that's like a coiled spring ready to explode. The years of suppression weren't just delays. They were a time of accumulation by the institutions now controlling the spot ETFs. To succeed here, you must shift from waiting to taking action. The data tracks the 2,500-day range, showing that market energy doesn't disappear, it gets stored. This makes an $80 surge not just possible, but mathematically inevitable after all those years of tight consolidation. Understanding the white channel is your first step toward taking control of your financial future. Most investors look at a flat line and think things are stagnant, but you need to see it for what it really is, a pressure cooker. The edges of this channel aren't just suggestions, they're the walls of a cage. And when those walls finally break, the price won't just creep out, it will explode. The key to this is the apex point. This is the exact price level where the risk-to-reward ratio tips in your favor. Once you identify this point, you stop being tricked by the fake-outs. No more falling for those brief spikes that trap buyers right before a drop. Instead, you'll be on the lookout for the validation signal. The wealth transfer through the XRP ledger is a rare, once-in-a-lifetime event, and investors need to position themselves before the institutional money floods in. This isn't just about reading a chart. It's about understanding that the legal clouds have cleared and the infrastructure is finally set up. By focusing on the boundaries of the channel, you can tune out the daily noise and distractions of the news cycle. You're not trading headlines, you're trading a geometric certainty. Now, you're waiting for the moment when the white channel stops being a ceiling and turns into a floor. The apex point checklist helps you identify the exact moment when volatility surges and volume confirms the trend. This gives you the power to ignore the small price wiggles and stay focused on the confirmed exit. The breakout of the white channel requires a very specific weekly close to be considered valid. If you don't know that exact number, you're simply guessing. But once that close happens, your noise filter kicks in. You stop focusing on the 5-minute charts and start eyeing the $80 horizon. This is where the shift occurs, from hoping for a pump to taking action and executing your plan. You're no longer waiting for the market to give you permission. Instead, you're waiting for the market to hit your triggers. If you don't know exactly what each of your tokens is for, you'll end up selling them for a fraction of their true value. A lot of holders are operating blindly, staring at their screens without any clear roadmap. To survive the extreme volatility leading up to $80, you need to give each of your tokens a specific purpose. This is your moment to transition from being a passive observer to becoming a wealth architect. You must decide your tier now before the green candles start blinding your judgment and the pressure of what if takes over. This math-based anchor shows the difference between holding 1,000 XRP versus 5,000 XRP when the price hits $80. It highlights the difference between a mere debt reset and securing a lasting legacy. The data breaks down the difference between an $80,000 outcome and a $400,000 result. It shows you exactly which wealth bracket your current holdings can actually reach. Emotional detachment is a skill, not just a personality trait. It's something you develop through education. And if you want to master the skill-building side of financial agency, you're no longer just holding a coin. You're managing a portfolio with specific calculated outcomes. The debate over XRP's price shouldn't focus on pennies. It should be about XRP's role as a bridge asset for the world's largest banks, requiring a valuation that supports trillions in liquidity. One of the most powerful strategies in your playbook is the free carry strategy. You no longer have to worry about a crash because your initial investment is already safe in your bank account. This visual shows exactly what price point is needed to recoup your investment. It demonstrates how taking a small 10% exit at around $13 halfway through secures your principal. The chart highlights the $13 safety valve, proving that a little profit taking early on actually makes the entire journey to $80 a risk-free opportunity. For someone holding 1,000 XRP, $80 represents a life reset. It clears your debt and gives you more time. But for those holding 5,000 XRP, this isn't just a reset, it's stepping into sovereign territory. It is the power to walk away from the system entirely and build a legacy that lasts for generations. But you need to make your decision now, before volatility tests your resolve. So, this raises an important question for you. Which side of this trade are you really on? Are you the one funding the exit, or are you the one executing it? Let me know in the comments below. Market geometry doesn't care about your personal opinions on price. It follows the path of least resistance. If you see $80 as a fantasy, then chances are you're still looking at a linear chart. But the market moves in percentages and logarithmic scales. In February 2026, the data shows we've successfully mirrored the suppression and parabolic shift that occurred nearly a decade ago. This isn't a guess. It's the result of 7 years of stored energy finally finding its exit. And if you're no longer guessing, you're tracking a mathematical certainty. This comparison overlay matches the breakout structure from 2017 with the current 2026 cycle, showing the exact same percentage expansion. The visual confirms that the current market structure is a direct fractal of the 2017 rally. It proves that when years of sideways movement break, the result is a vertical surge that mirrors previous cycle lengths. To navigate this, you need a Fibonacci tool. Professional traders use the 1.618 and 4.36 extensions to predict where a blow-off top might land. While retail investors buy into the hype, the smart money is selling based on the math. By plotting these levels yourself, you gain technical sovereignty. You stop asking, when moon, and start asking, has the 4.236 ever been hit? This shift in focus shields you from the emotional frenzy of the crowd. You're trading based on geometric gravity, not on social media sentiment. What we're witnessing is the biggest macro setup in human history, where high utility assets like XRP transition from a long-term horizontal base into a parabolic price discovery phase. But remember, the path is never a straight line. Between here and the peak, there are two major gravity wells, $13 and $27. These are the midway traps. Most people will watch their portfolio increase tenfold and sell everything at $13, only to see the price double or triple again without them. You need the agency to view these corrections as just breathers, not as the end of the trend. If you understand the roadmap, you'll be able to handle a 13% drop at $13 because you know the destination hasn't changed. This roadmap highlights $13 and $27 as key volume nodes, where the price will likely pause for consolidation. The data shows us these two major zones where price momentum will stall for a while, giving you the foresight to hold, while most of the market exits way too early. Logarithmic reality tells us that an $80 XRP is just a mathematical reflection of previous cycles, adjusted for market dominance. With spot ETFs now live and the XRP ledger handling massive institutional volume, liquidity is no longer a barrier. What we're witnessing is a systemic revaluation of a suppressed asset. The math has been set for years, and the market is simply catching up to the geometry of the charts. You're not betting on a miracle here, you're watching a calculated process unfold. You need the agency to walk away from the table, or the $80 target will anchor your financial decisions. To be a sovereign investor, you can't just chase the moon, you need to focus on the math. An $80 XRP requires a market cap north of $4 trillion. That's bigger than the entire crypto market as it stands today, and it's much larger than it was just a few years ago. If you're not prepared for the possibility that the market stalls at $10 or $20, then you're not investing. You're simply gambling. You need the power to hedge. This is the moment you decide if your strategy is built on data or just wishful thinking. This visual shows the scale of capital needed to hit $80, forcing you to recognize that such a move requires a complete shift in how global liquidity flows into the XRP ledger. Then there's the internal competition to consider. Ripple is now promoting RLUSD, its own dollar-pegged stablecoin. While some see this as an advantage for the ledger, others worry that it could undermine XRP's role as the bridge asset it was designed to be.